In this video, we're going to talk about how I'm going to make money in 2025. This stock market, if you're asking me, has no friction to the upside. See, Wall Street does not like uncertainty. And for everything that's about to happen, where everybody thinks there's going to be uncertainty and chaos, not at all. If anything, we're going to find that this stock market, with the Fed lowering interest rates, companies having more profits, Wall Street should go higher. In fact, I'm predicting Dow 50,000. That's right, Dow 50,000. Do the math. It's only 7,000 points away from Dow 50,000. That's going to be a huge number to look forward to. But hey, look, how do we make money? How am I going to make money? In this video, I'm going to show you exactly how me and my members are going to navigate 2025. Stick around. I know you're going to like this one. Hey, welcome back, everyone. Let's talk about two stocks. You know, the stock market has absolutely rallied since the election, so I really want to talk about how we're going to make money going forward, at least how I'm going to make money. I am going to really focus on 3x leveraged ETFs, and we're going to be very selective when we pick an actual stock that we're going to use. The one thing that I have learned over the past year is that single stock risk really needs to be one of the very top priorities when we think about investing in these stocks. Because if we go back this year, remember that I got involved with UPS late last year, and early this year I took a big hit. Then I got involved with Las Vegas Sands, and that didn't turn out well. And then, of course, we find that we're in AMD for much longer than I wanted to be. And then we have the debacle that is SMCI. So where I've had issues this year, it's with single stocks. Largely, all of my gains and profit and success has come from using a basket of stocks in a leveraged ETF. We're going to use more and more leveraged ETFs to give us diversification. We're going to trade the indexes and sectors that are red hot, like the semiconductor sector, we're using SOXL, and the indexes, we're using TNA, TQs, and many others. We're going to try to be diversified because we don't want one stock falling and then we have to sit on our hands and not do anything. We can't do anything. And not only are we carrying the dead weight of that bad trade, we are carrying that bag on our back for months because we can't use that money invested to make weekly and monthly income. So not only do you lose when you find yourself in a bad trade, that in itself sucks, but now we're carrying the bag for months and months, and maybe we get out of a trade. Maybe we don't. So we are going to focus on 3x leveraged ETFs, indexes, sectors. Another thing we're going to do is we're going to take our losses. This is what we're going to do. We're not going to hang on to losses for months and months and months. Now, we have had some trades that were down, and we let them work their way out, and we got out of the trade clean. But when you identify that you are in a dead trade, and I need to get better at this too, we need to drop that baggage and move forward. That's really where I'm at with SMCI. That's the one thing that really irks me about this trade, is that how I got into it and then why I'm still in it now, knowing what we know. So we're going to tweak some things so we can be better and we can even be more profitable, because what we're going to do is really focus on diversification, trading the indexes, trading the sectors, and then using that 3x leverage so we can get the premiums that an individual stock might give us with their implied volatility. Now look, we got Bitcoin rocketing to the moon. So you see that Coinbase has gone from 140 to 240. And you're sitting there saying to yourself, wow, I could have rode that all the way up. Well, what I want you to remember is that Coinbase fell from 285 to 140. So these things ebb and flow. What we really need to do is identify those trading ranges and we stick to the plan. See, if you have anywhere between 5 and 6 different stocks, we can trade these things while some of them get away from us in the short term and the other ones are still lagging behind, and we can trade those. And that's a great example for SOXL. SOXL is the 3X Leverage ETF to the semiconductors, and we've been using this now for months. The market has rallied incredibly since the election, but this hasn't, and that's okay. TNA rallied from 43 to 53, so that kind of got away from us. We're going to let that one percolate a little bit because it's going to come back for us. And if you look at some of the other 3X Leverage ETFs, such as DPST, which rocketed 30 points, we have to let those go. And what we have to do is let them establish their new trading range. See, when they're trading at the bottom and they pop into this new stratosphere, well, you don't know where the range is at. So that's where it gets a little sticky. Because if I think that this is this new range, well, this thing can come right back down. And that was very similar to what happened to yin. Do you remember when yin was trading in and around 21? The thing popped to 55. Everybody's thinking it's going to stay at 55. It rallies, and then, of course, slam, it's now trading for 32. And you're left holding the 55 bag. Very important to have 5 or 6 stocks. And as some of them go higher, the others are not. So you're going to trade those and you're going to trade the ranges. And of course, we want to plant our flag in the mid-range and potentially do puts and in the money covered call strikes at the bottom of the range. Now, right now, SOXL is still playing in that sandbox. And you can see it's trading for 35. What was the sandbox? What have I been saying about its sandbox? I've been telling you that I love it at 30 for a bottom. I think its top is 40. So let's take a look at the chart and really talk about this. Notice the 30 strike. We can go all the way back. This is the beginning of September. We get that nasty sell-off in the markets, and SOXL falls with it because NVIDIA fell down near 100. So 30 is our bottom line with SOXL. You've been seeing, I've been doing strikes for 32, 31, 30. I love those strikes. I just closed a 27 strike for my son. So I love how this thing is trading in and around the mid of its range, because right now, if 40 is what I think is the top, 30 is what I think is the bottom, 35 is right down the middle, and that's what we're looking for. Now, it's trading at 35. What would I truly like? Well, I would love it to trade 25%, right in the 25 percentile of this range. 35, 30. What is 25%? We're probably looking in and around that 32 price. Looking for 32. So if this thing could get down to 32, that's where we would love to get involved. Well, it may not. So with it trading at 35, we buy the shares and then we do the 32 in the money strike. We get the $3 of downside protection, plus we probably get some nice premium. It's a 3X leverage ETF to the very volatile semiconductors. Now, if you wanted to do a cash secure put, of course, right now with it trading at 35, you would do that 32. You plant that flag at 32. Now, why would we do this? Because if it falls, we get downside protection. And even if it falls below that and it goes to 30 and you're sitting there at 30 with the shares, you can write the next covered call at a 32 strike. That's what I love about these bang bang trades. We're going to do our first one, collect a decent premium. And then if we're getting stuck in the trade, our very next one is going to be a decent out of the money or maybe very close to the money covered call. Now, the reason I showed you that trade is largely to talk about trading ranges, because what you see happening now, you have this excitement, this volatility, and stocks are exploding to the upside. And I know you're sitting there. You got FOMO, the fear of missing out. But what you need to understand is that what goes up will come down. And that's what happens in the stock market. When we take a look at TNA in particular, now remember, TNA is the Russell 3000 small to mid cap. This thing is very volatile. When we look at its chart, we can absolutely see that Wall Street runs it up to sell it off to run it up. So this is where in the most recent rally, you're sitting there saying to yourself, oh my gosh, I missed out. But when we just draw back the chart, every single time this thing has rallied, and you could see that it's doing it now, we get a pullback. And just like it did back here earlier in the year, then it traded sideways. Then it rallies again, pulls back. And by the way, that little trade right there had everything to do with the Fed saying they were going to stick with their plan of cutting rates. Well, what we find is that it trades in this beautiful range. But when we do get these spikes, we have to sit back, let it work out a little bit so it can find its range again. In the case of TNA, I am going to wait because it has popped tremendously higher. It hasn't told us where it's going to trade. And my take is it hasn't necessarily moved considerably higher since the Fed said they were going to start doing rates. Yes, they moved from the 30s into the 40s, and that's beautiful. But let's not have FOMO, because what goes up does come down. I mean, look at this moment right here. You're absolutely running this higher and slam, and now it's trading at the bottom of its range. These are indexes, and Wall Street will take profits from the indexes. They don't have to be in this index. There's nothing coming out with single stock news or anticipation or growth. This is a basket of stocks, and they're just going to play it. They're going to ebb and flow it. So TNA, if I were going to trade TNA, again, this goes back to great entry points. This is what I show the members all the time. We have to have great entry points. Notice, we were trading this line on TNA for the past year. If you remember, I just did a video where I talked about making 50 grand a year on TNA only. We were trading that line every time it got to the bottom of the line. We traded it. Now, we made hella jack when it was in the 30s. Then it popped to the 40s, and everybody's getting skittish. Now I'm saying, hey, it's just a new sandbox to play in. We just have to identify the sandbox. So when it popped to 48, and everybody's saying, should we use TNA? I'm like, no. It's got to prove that that is the new sandbox. And it did not. It pulled back. In fact, it pulled back 10 points. Luckily, we get this move here after the election, because trust me, the bag holder at 48 may not have seen a profitable trade had we not had that election euphoria, because this thing was probably going to trade like this for months, because that's the trading range. How am I going to play TNA right now if I want to get involved? Well, I do like the 47 strike. Look, it tries to break resistance right here at the 47 strike. It pierces through. If it holds up there and this market continues to go higher, the Fed's going to continue to lower rates. And there's this perception that we're going to have a great 2025 because chances are oil prices might come down. That puts more real money in the consumer's wallet. They're going to go out and spend money. Businesses are going to have more profits. So this could now be in a new trading range. The trading range could be anywhere from 53 to 47. And once it proves that range, we are going to be playing anywhere between that range. Look, this range is done. The 30s are over. The 40s potentially are over. We now have to have this thing find its new range, and when it does, we are going to play in that sandbox. We are going to eat at that table every single week. So many times, people have FOMO, the fear of missing out. I'm getting emails saying, oh my gosh, Coinbase is rocketing to the moon. Well, trust me, it rocketed to 285, and it fell to 145. What goes up does come down. I mean, I could show you Coinbase's chart. That thing got ripped, and I was a part of that. Do not get caught up, man. This is where you become a great trader. You let emotions leave the room. See, once emotions enter the room, once you attach money to this game, all of a sudden emotions come in, you make bad decisions. Or you make emotional decisions, and for the most part, those don't work out. That's why 97% of home investors lose money, because they let emotions enter the room. See, I don't let emotions enter my room. These are nothing more than numbers, and I watch the numbers and I trade the numbers. That's really it. At the end of the day, that is it. This is why we usually don't find ourselves in bad trades. Now, yes, I was in a couple bad trades this year, and let's make note, the two that I mentioned earlier, UPS and Las Vegas Sands, that was a poor man's covered call trade where I absolutely should have picked a longer expiration, because for the most part, those trades would have became profitable. Maybe not so much on the UPS side, but clearly on the Sands side, because Sands absolutely rallied, I think, to 56. That was my miscalculation on how long I was going to hold the Leaps call option. We have been pretty good finding great entries. And that's going to be the key to your success in 2025. Because if you find yourself buying at the top, most of the time you're going to get hammered when this thing pulls back, because Wall Street takes profits. Suckers leave profits on the table. That's why I do weekly and 2-week cover calls, puts, and if we have to, we do the 30-day trade. We make sure it trades in our window, and if we have to do the 30-day typical trade, we're going to try to make sure it's at the bottom of the range so we have a more favorable chance of getting out of the trade. Look, we don't go into these things blindfolded. And in the case of SMCI, I'll tell you what, that blindsided everybody. So we have to work through that, and we will. And I absolutely hope we can. This is why we are going to focus on 3x leverage ETFs to the indexes and sectors, because we're not going to have single stock risk. Now, does that mean I'm not going to trade great companies? Of course not. I'm right now in a Merck trade that I still believe is a good trade. It's fallen off because of earnings, but we're talking Merck. Merck has billions of dollars in profits and dividends. Wall Street will come back to them. You know, this chart looks very similar to Apple. Remember old Apple when it was trading at 170 and the rest of the market was rallying higher? Well, that's what we got involved with Apple at 170. Now, I'm not saying Merck is Apple, but Wall Street comes back when these things hit their support lines. And by the way, real quick, before I end the video, what do you see right here? See, this is how I teach my members with exclusive videos you don't see here on YouTube. I teach them how to find good entry points and where support lines are. But you can find that on different charting websites. But you don't get to see this. And this is what I'm telling you. Notice where it bounces today. Bounces at 102. Now, most charts might show you that that's a beautiful support line there, right? Last time it bounced, it rallied higher, and of course it bounced again, and we're hoping it holds that support line. It's after earnings and it's after the dividend, so there's not much news that could have it continue to fall unless the overall stock market falls. But how do I know that that is a really good support line? One that I could plant a big old flag. What we have to do is draw back to the very last time that it broke resistance. This thing is trading, and when it breaks resistance right there, notice that the support that it came back to was the last time it broke resistance. And now the stock powers higher. You're thinking it's going to go to 150. It doesn't. Where does it bounce? It bounces at support, but support goes all the way back to the last time it breaks resistance. This is what happened with Apple last year when I told the members we were getting involved at Apple at 170. It bounced off of that 170 twice before it rockets to 230. Now, I'm not saying Merck is going to do that, but this is what you have to see, right? You have to see technical trading. If you don't, then you're going to find yourself getting involved with stocks that are much higher. You're going to hold the bag, and quite frankly, we're going to be carrying that bag, that dead bag of money, until it rallies somewhat back. My members get trades where we are entering these trades at the bottom to mid of the ranges, so we have a great opportunity to go higher. Hey, look, I'm going to leave it right there. That's how we're going to make money in 2025. And it's not going to change much. We are going to narrow the single stock risk. I want you to join me. Go to my website, cptdashboard.com, click Upgraded Dashboard, and get your 1 free month offer. I actually have 3 offers there. 1 free month, 2 free months, and 3 free months if you load up. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.